Good morning, everybody. It is Thursday, January 16th. Were you ready for CPI yesterday? We didn't put out a video, but we did go over with our students, and we did this on PPI as well, to look at the insurance in the market. Did you know where that was and how that was going to affect the price action? If not, let's dive in and review what happened yesterday. A quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we came into the data, we were coming up to our 5,900, 5,890 level. And we see at 7:30 in the morning yesterday, and we knew this at the close the prior day, so close of Tuesday, we were about 25 to 30% overinsured. And again, go back to our older videos. We've gone over this multiple times that when people are overinsured in the market, then the downside doesn't get realized. That is a very high odds setup. Nothing in the markets is 100%, but it is extremely advantageous to know the positioning. And when everybody is prepared for the downside and protecting the capital they have in the markets, then even if the data was bad, we will get all those insurance policies coming back in to support the market. So you're more upside favored. And that's all that we had play out yesterday was the second the data came out, we shot straight up, completely vertical. And a few of our educators did get in. I got in at 59.03 and posted that trade in our room right ahead of the data for the easiest trade of the day. As we understand the positioning and we want to understand these flows. So then what happened after that is now we've pulled back to our 59.56, which was our upper rotational level we put out for you on Monday for the COT plan. For our weekly level, that was the upper rotational zone. If we held outside of that, we start looking for trend. And that was posted on Monday morning at about 8 a.m. Eastern. So you had those levels that this would signal we're looking for more of a trend up move. So you had two buys there yesterday, and then we trended up into the close. And that's all that's happening in the market is the positioning that's going on, who is in the market, where they're putting their money at risk, when they're protecting it. And if you can identify that, then you can understand when certain patterns or certain price action is going to come. So today now our market makers are back into risk compression mode. They had been in risk absorbing for a while. So what this will do, as long as we stay over our line in the sand, which today is at 59.80, we will look for smaller ranges and a little bit choppier price action. So that is this purple line right here. That's exactly where we came to in Globex, and now we're coming back down to right after we hit our 60.17 level. So we're looking for rotational price action today, and we'll get into the levels here in a second, but to focus on the rest of the positioning in order to understand what to do at these levels, our systematics are basically non-participants until we get under 59.45 or over 60.35. So we've pulled basically a participant out of the markets. And fund managers, so that strategy is only about 60% invested. Fund managers are about 2/3 invested, which tells us that there's a lot of money still sitting on the sidelines. And if we go back and we look at our models and look at the mapping of these fund managers and these flows, 60% for the last 18 months has been when the market bottoms. They'll sell down to that much and then they start redeploying capital, but they don't do that at the bottom. They end up chasing it higher, which is what's happening in this move. So we've been monitoring this and paying attention. And again, nothing has fundamentally changed from the FOMC and the VIX expiration last month, which VIX expiration is next week. And then we get FOMC in 2 weeks again. But overall, since we've made this move down, nothing has really changed. And so if you got too bearish too soon, you can definitely short the bounces. But if you keep looking for a move down to 5,500, it's not quite time yet. And so all this is doing is giving the commercials that position to the position they have short to cover that. And we've seen that show up in our COT reports and our COT plans. So back here in December in the 18th, when we made those all-time highs, our fund managers were 99% invested. Our systematic strategies were buying on margin. We just ran out of buyers. And then we understand they're all liquidating while the commercials are covering, and then we will go back. And that's all we're seeing play out. So for today, we've discussed that we are expecting, as long as we hold 59.80, a little bit of a smaller range, choppier price action. 60.34 is our big level where our systematics will come in. And for our trades today, we're looking for rotational price action from 59.96 down to 59.26. Big level is going to be that 56, which is our rotational high on our COT level. So for the weekly plan, this was our rotational high. If we come down, 22 is where we're going to look for the market to slow down and look for a good long. As long as we hold 80, we're going to look upside over 96. If we get under 80, we expect bigger ranges, which brings that 22, 24 area back into play. But we really then want to make sure that the market slows down and turns before we are jumping in. We're not going to catch that falling knife. Now, on to the NASDAQ. We'll get into our daily levels in a second. If we look at our weekly plan, and again, this was posted on Monday morning, about 8 a.m. on our X account. We've held our rotational low right up to the pivot on Monday, and then over the pivot for CPI, right up. Our high day yesterday was right at our rotational level from our COT. So all we're doing is rotating in this area. If we can hold outside of this, then we can actually look for trend and look for the market to get a much better, cleaner move. And this is our weekly plan. Now, on our daily plan today, we are looking for a rotational price action between 433 and 183. Our pivot is 350. If we get over 433, our next level is 639 as our pivot with a target of 730. And if we get under 183, then we're going to watch for the pivot at 21,051. And again, we'd be back under the line in the sand on the NASDAQ, which brings in wider ranges and larger swings, larger candle sizes. That's when we want to be cutting down our risk. So that's what we're going to look for today. Those are our levels. If you want to know how to trade them, or you want to know the other factors we look at, or get access to these tools, check out our courses and Discord offerings. And have a great day and stay safe trading out there, everybody.